Good day. I'm Mehdi Sanaji, and welcome to your Finance.tv's Crypto Revolution, covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. But before we get into it, don't forget to like and subscribe if you want to stay on top of our content. And as always, feel free to drop us a line if there are any topics you want us to explore. Adam, welcome back, and how have you been, sir?
Oh, I've been good. There's always news going on in crypto, and that's what I like. Something fun to talk about. Well, I say something to talk about, not always fun, but there's definitely plenty for us to discuss here today.
That's for sure. And I don't want to jinx anything, but the crypto winter seems to be falling to the wayside, and spring's almost into full force here. Things have been trending nicely. Just outside of everything that's been happening, the financial world has been in turmoil following the collapse of SVB, Silvergate, and Signature Bank. And let's not forget Credit Suisse, which obviously has had its own issues as well. But the first three banks had ties to the crypto industry. Where are we today? It looks like New York Community Bank is acquiring Signature Bank's assets, but there's some 4 billion in crypto holdings, which are still staying with the FDIC. It all seems to come to difficulties for the on-off ramps between DeFi and TradFi, and we're kind of sitting in that no man's land. Where are we, Adam?
Yeah, it's a really difficult spot right now because, as you said, the on and off ramps are really important. I have to get somehow from my dollars into crypto, into Bitcoin or into ETH or into DeFi or something. And usually that comes from dollars that I have sitting in a bank. And if it seems like many of the banks that are doing that type of business are being targeted by the Fed or targeted by the FDIC or targeted by the Treasury Department or whomever, then that's going to continue to make it more and more difficult for me to get my fiat currency or my dollars into Bitcoin and get my Bitcoin back into dollars, which is going to make it even harder for the crypto industry here in the US. You mentioned, Mehdi, that Signature Bank, which of course was shut down by the Fed last week. I think it was last week. Maybe it was 2 weeks ago. I don't know. Maybe it was a month ago. I can't remember anymore. It seems like it's been a year. But when Signature Bank was shut down, of course, there were rumblings that it was done because of their crypto relations. Barney Frank, who's on their board, said, "I feel like this was done because of our relations in the crypto world." Then there was news coming out from unidentified sources that when the FDIC was auctioning off Signature Bank, they were doing it without the crypto assets, and specifically saying they would only accept offers or only award the bank to a group that was going to buy it without the crypto assets. And then the Fed came out and said, no, that's not accurate. And lo and behold, that's exactly what they did. They have sold the bank. They've auctioned off the bank, except for this $4 billion in crypto assets, which I don't think we're sure where it's going to go. Right now, it's held with the FDIC. So I guess if you're one of those companies, maybe you feel pretty good about yourself. The FDIC is holding your crypto right now.
Everything really is a bit of a mess. And
it really is. And you talked about, Credit Suisse, because here in the US, we see this banking mess and you go, okay, but at least, in the crypto world, Switzerland has actually been a very forward thinking country in terms of their regulation, in terms of what the banks are doing there. They see themselves as as to be on top of the financial world, exactly what's happening in the financial world. They want to be that country. But you have, two different things at play here. You have the issues in the US with crypto going, how are we going to on and off ramp? And are banks going to be able to participate? Am I going to be able to participate through my bank? But then you also have the fact that from a macro perspective, if the US is saying, if Janet Yellen and everyone is saying, look, we might guarantee all deposits, or we're going to guarantee deposits at the 20 largest banks or whatever, that to me signals a tremendous amount of more potential money printing, which is exactly the use case for Bitcoin, right?
But it does come down to trust and integrity. The foundation of DeFi was born from not needing to trust your counterpart, with a third-party independent verification. But the bigger picture has had a lot of question marks. We've seen Terra all the way through to FTX, and a lot of trust gets lost as we see these types of things collapse, right? So the counterparties you deal with, you have to have some form of trust in them. Otherwise, there's nothing. And do you believe the crypto industry can build its trust again after some of these issues like FTX, Terra, and is it going to take like an FDIC to come in and say, okay, we're going to guarantee these assets? Like, where does that blend kind of come into it?
That's a really good question, because in the crypto world, we talk a lot about trustlessness. And that doesn't mean that I can't trust you. It means I don't have to, right? Like, I know, Mehdi, if you send me 1 Bitcoin, I know that you had to have had it before you sent it to me. And that is the essence of this trustlessness. It's the idea that if we go to decentralized finance and Ethereum, it's the idea that if I'm going to interact with a lending contract, if I'm going to interact with a lending protocol, I can see everything that's happening. I know exactly that there are funds available in that pool, that if I want to lend or I want to borrow, I know where the funds are. If I'm going to use some sort of crypto asset as collateral, that protocol or that code can read my wallet and say, Adam already has these funds. So that's the essence of trustlessness. It's not that I don't trust you. It's that I don't have to. I can read the code, and I can read this digital money and see that you have it, or see that you have the collateral, or see that you've borrowed the money, or see that you've lent it. All of those things, I can actually see it. And that's the essence of trustlessness. Now, when we look to, do people trust the code? That's the biggest thing. That's what you're talking about here, is can we trust opening up our wallets, literally putting our money on this system, on this decentralized system that is not owned by anyone. There's no throat to choke here. There's no government putting their stamp of approval on it and saying, if this goes awry, we will backstop it all, like we're seeing with the banks. So what you're saying is can the crypto industry develop that level of trust with people that are utilizing? And the honest answer is, I don't really know. I think they can. I think we have to get away from using crypto as just a way to make a whole bunch of money, and see it more as a system that we're going to use back and forth. See it as a system where I can send you money, I can pay for things, I can borrow, I can lend, I can do all the things that I can do in the traditional financial system. And most of those are not take $100 and turn it into $1 million. I can't do that for the most part in the traditional financial system. And that's not what crypto should be. That's not what DeFi should be. So if DeFi and crypto can get away from that and go, what do we need to allow people to trust us? Do we need some sort of insurance body, or do we need some sort of insurance code to make sure that deposits are covered? By the way, that code actually exists. People just have to use it. People just have to use those platforms. And I think a big part of it, Mehdi, again, is we have to move away from this idea that crypto is a get rich quick scheme and into it's a different type of financial system. It's really a different type of database, but overall it's a different type of financial system that you and I are able to transact, and I don't have to know who you are, and I don't have to care. If you have the money, you can send it to me. If I have the money, I can send it to you, and the transaction's done. That's the essence of the trustlessness we're talking about.
And interestingly, as things in the traditional financial world seem to be having struggles, it feels like people are turning to decentralized finance and are asking questions and are looking to learn more and actually put their money where their mouth is and to get involved. So, I think we're not necessarily there yet, obviously, but it feels like we're starting to transition in a nice way.
I think what's happening is, I think the interesting part here is we're losing trust in the institutions we've always looked at to take care of our money and take care of the regulation and take care of the finances. We're losing a lot of trust in those, whether it's the government overall, whether it's just our leaders. And I'm not talking about just in a financial sense. I'm talking about just overall. I mean, 50% of the people in our country don't trust the leaders, right? I mean, we saw that at the polls. We saw in France, what was it last week, where the president just unilaterally decided to change the retirement age. Didn't ask anybody's opinion, didn't put it up for a vote, just changed it, right? There's a lot of trust being lost elsewhere. And then we go to seeing what the Fed did and the FDIC and the Treasury and saying they'll backstop things. And you and I have talked about it before. I think we've lost trust in those people that used to go into a room and decide things, and they come out and they tell us what their decision was, and we go, okay, that's what we're following. And now we go, I don't know if I trust those people to go into a room and come out with the right decision, right? So we're losing a lot of trust there. And we go, okay, are we going to augment that or outsource that trust elsewhere? And can we trust this code that's been developed instead of those people?
Well, let's see how all this starts panning out. And, obviously with Fed decisions and everything that's coming down the pipeline, we'll get more and more clarity or not as things progress.
But we'll at least know what they talked about in the room.
Yes, absolutely. Well, how about some regulation chats? Or this is loosely regulation, I should say. Ron DeSantis, our old Floridian friend, he's looking to differentiate Florida again, and it's not just for people in Walmart. As there's more talk around potential CBDCs, we now have more politics being thrown into the equation. What are the implications of Ron DeSantis's decision, or sorry, not decision, statement that he would like to ban CBDCs if they ever come around? Do we think that he's a solo player in this, or is he going to be getting the other states all rallied up as well?
Well, one, he is definitely not a solo player. This is a big kind of Republican rallying cry around crypto is, the more conservative, the GOP is basically like, we need to let people do what they do. We need to embrace the fact that in the US, we should have some sort of privacy with what we do. And Ron DeSantis, of course, is, very outspoken. And in this case, has said, we don't want a central bank digital currency. We feel like it gives the federal government the ability to look at literally everything we do with our money. And my biggest worry is not so much that they can look at everything we do with our money. It's that they can literally shut off my money with a push of a button. That's what worries me about a central bank digital currency. And Ron DeSantis has said, we don't want it. Representative Patrick McHenry has said that. There are several that have said, we don't want this. To the point that Ted Cruz, my hometown senator, lives, not too far from where I live right here, has actually, I think, put a bill forward in the Senate to ban the federal government from issuing a central bank digital currency. Now, whether or not that passes, it doubtfully gets through the Senate and the House and gets approved, but it starts the conversation for everyone on what would be a central bank digital currency. What does that mean? And does it violate our right to privacy? And, a lot, of course, in the Republican camp believe that. This, of course, is going to get political, as it always does. And people are going to take sides based on which side of the aisle they're on, probably more so than what they actually believe, as we've seen before in government. But, I'm kind of glad this conversation is starting now. And of course, it's starting with a few guys who are very outspoken, actually putting their foot down and saying, we're not going to stand for this. Like, don't even get the conversation too far down the road. We're going to try to stamp it out right here. Now, I'll say this too. I have no idea if the state of Florida has the ability to say, if the federal government issues a CBDC, we're not going to accept it here. I don't know if that's legal. I don't know if they can do it, but I think they're just kind of making a point.
Yep. Let's have a look at some applications of our technological universe that we're discussing. I know this is one that you like, and I know it's one that our lovely Dux likes as well. He might even watch this because this is bringing DAOs to something he's very passionate about. LinksDAO wins the bid to buy a Scottish golf course, which sounds awesome. Run us through this, and how this all works.
All right. So LinksDAO started, in 2021. When everyone was starting a DAO, and they said, you know what, a DAO is essentially like a membership club, right? So what they did was they sold a bunch of membership NFTs. So you and I have talked about, NFTs being pictures of monkeys and everything else. Well, they sold NFTs that were memberships to this, basically a club. All right. And at the time they raised about $10.5 million doing that. And those members of the club, they show their membership. Instead of having a card, they have an NFT in their wallet. And with that $10.5 million and other money that they've raised, they've done certain things. You can get a discount on golf items. You can get a discount on golf courses. They've negotiated those things. And look, it's not that much different than a golf membership, except for the fact that it's good at several different golf clubs, I guess, throughout the world. Now what they've done, and they said from the beginning, we want to own a golf course at some point, is they've actually done it. Now, important to point out, the DAO members, or the members that own that membership NFT, are not owners of the actual golf course, right? There's an an incorporated entity that actually owns the golf course. Those members that own the NFT, they don't get to participate in the income or anything like that. They just get to show up at the golf course and play. They get to show up at these golf courses and play for a discount or play for free. They're basically members of a club. But the interesting part is that club has now gone on and bought a golf course, which is, you know, as you and I talk about, we like to see some of these real world use cases. So something really happen, or whether it be with NFTs or DeFi or crypto or anything. And this is more than anything, it's just a fun one, right? You're a member of a club, and instead of having a little membership card, or instead of having your name in the computer when you get there, you just kind of flash your wallet and show that you're a member of the club, and you get, you know, again, discounts. You can play the course. I'm guessing it's things like you can play the course at certain hours or something like that. But it's fun. They bought a golf course in Scotland a whole lot. It's not that different from having any other membership card that you probably have. It just happens to be on your phone. I think part of the difference here is, though, I can sell my membership. So I can sell you my NFT if I wanted to. So if there are only 5,000 of them ever created, there can only be 5,000 members at any one point. And if you want to buy it from me, now we have to figure out what the value is, and you and I can technically arrive at the value. And now some of that value is, oh, I get to play at this awesome course in Scotland anytime I want. You know, twice a year I can play for free or for discounted rates or something. What is that worth to me? So now all of a sudden, membership in LinksDAO is probably worth more to Ducks than it was before, right? If he gets to maybe play at this course.
All right. So before we wrap, Mr. Softy, bringing it home, Microsoft, their old friend. I'm not necessarily a fan of Microsoft Edge. I'm a Chrome guy, but I do like the integration of a wallet into the browser. It sounds like a very cool way of integrating your wallet and your coins and your crypto and everything within your day-to-day universe that you're living in. It does raise some questions, though, right? Around security. Do you think this is kind of going to be safe? How do you see the flow of me being comfortable? This brings us back 20 years ago when we all joined Amazon, and we were really scared to put our credit cards on the Amazon website to buy a book or a pair of shoes, right, or whatever it was. I remember vividly being very nervous. Ooh, what happens to my credit card details? Is this going to be safe?
Right. And so, look, on the one hand, you go, okay, Microsoft Edge is necessarily delivered to, is on the desktop or on the laptop or whatever of everyone who buys a computer with Microsoft software, right? That's not an Apple, basically. Everyone gets Microsoft Edge already there. I'm guessing most people probably don't use it, as you said, like you use Chrome, I use Brave. And so most people don't use Edge. So part of this is probably Microsoft going, all right, let's give people a reason to use this. When I use Chrome or I use Brave, I have to put an extension on the, MetaMask extension or some sort of wallet extension on there. And so Microsoft is saying, look, you don't have to do that anymore. You don't have to trust some other group that's building this. You don't have to trust that integration remains. We're going to bundle it all together. And the browser is just is natively going to have a wallet in it. So on the good side, it's like, 200 million people or something using Microsoft products that have Edge already on their computer now are going to have a wallet, whenever they decide to make that part of the update. That's probably a decent thing for crypto. One less thing for you to have to do. You don't have to download MetaMask. You don't have to, put that extension on there and learn how to use that. It takes away a step, which helps in adoption. You mentioned the security of it. Is Microsoft going to have all my information? That I don't know, but what I have to imagine is so many people are going to get to look at this code because it's a wallet code. People, they're going to have to interact with it. Consensus, which is the company that built MetaMask, that built the MetaMask wallet and built so much for the Ethereum ecosystem, has already been working with Microsoft to create swaps, to create kind of an exchange in there. So you have to imagine that so many people in the crypto world are going to look at the code behind this wallet that if some of this information is going back to Microsoft, if there is a backdoor or something, someone's going to find it before it gets launched. I have to imagine that's going to happen. There's going to be some sort of bug bounty there. Something else that's interesting to note, as I was reading through, several articles about this, is some of the people at Microsoft said, we were shocked at how easy it was to add a wallet to our browser, to the point that we think we'll launch it sooner than we ever thought. Like we thought it would be difficult to add a wallet, and it's really not that difficult. So that to me was actually a pretty interesting statement, that even the people at Microsoft thought this might take a year or something, and then they wrote it and they're like, oh, that's it, we're done. We have a wallet. So, there's got to be a lot of testing of it. There's going to be a lot of people looking at it, bug bounties like we saw with Coinbase and their wallet as a service. But look, overall, as you and I have talked about, I don't like when the big Web2 companies jump into crypto, because I'm worried about what they're going to do with this thing, with a wallet and Microsoft. I think, yes, there is that worry that they're going to take some of that data, that they're going to use it. There's going to be some backdoors, but I also go, all right, there's going to be so much scrutiny over this code that it probably can't get there without someone noticing.
I have to say, Microsoft has kind of been like a sleeping giant over the last couple of decades, and they seem to be stepping up quite aggressively in the world of AI and the world of crypto, and bringing this integration of new world technology into a comfort zone, right? So right. Microsoft has always been a comfortable solution for anything and everything technology-wise, right, on a broad-based offering.
Yeah, I mean, they're the pioneers at bringing us adoption, right? You and I don't natively know how to use computers. We natively know how to use GUIs. Like we know how to use it because Microsoft gave us Windows, because Microsoft gave us all those things. So if there's anyone that could aid adoption, it's probably Microsoft. They're the ones who brought the personal computer to our desks.
Exciting times. I like what they're doing. It's, we'll see how it all pans out, but it is reassuring to hear that they're confident, so I'm confident.
Yeah.
Adam, as always, mate, thank you so much for your time and sharing your thoughts with us at Crypto Revolution.
Thank you for having me. I always love talking about it. I'm sure there'll be more to discuss next week.
There will. And I always want to urge our viewers to check out Adam's course on digital assets and crypto education. The website is down there. And of course, don't forget to subscribe to yourfinance.tv. Get it done, and we'll be back next week with more about the crypto revolution. Until next time, good luck investing.